Hello, Warriors. How's everyone doing today? Let's take a look around at the markets now. I'm doing okay. How are you, Kevin? Alexander? Hello, Sinatra. Ren? Hugo? Hi, Irina. Marco? Paul? All you Warriors. Hi, Galaxy. How are you? So starting off with crude. You know, since we took out the 62 stops, we've been working higher. It's still my contention that we're going to put in a lower high. Today might be it for a turnaround Tuesday. Almost got up to 65. Potential reversal day working here in crude. Also a potential reversal day working in Aussie. Didn't quite take out that high. Has pretty good symmetry if you're looking for a right shoulder. The only other scenario would also be bearish, but would give us new highs for a 3. Okay, so that's the way that looks. We've had 2 pretty good down days in the S&Ps, and we have to hold this moving average here. So far, it looks like it could be an ABC, and we get one more launch into late this week, early next. But Friday, when I said that was a high, it was a high. Is it the high? That you never know until you look in your rearview mirror with a lot of time behind you. So right now it looks like it could just continue to give us one more push to the upside. NASDAQ's still weaker. We'll see how Russell acts. Russell acting like, you know, maybe it has one more push up here as well. And interesting action in the yen. We actually held around the 38% level in the end. Didn't quite get down there. It got pretty oversold, so you have to be careful about that. One thing I want to point out is that a weaker dollar sure didn't seem to help stock indexes yesterday for the first time. I mean, we had a pretty good sell-off. Here's your 15-minute. And then a sold off again last night. So weaker dollar really didn't propel it. Gold, it gave people a chance to buy it again near the breakout at 1760. Got pretty close. See this? It's got to hold here. So if you like gold, you're long. You're wrong back under this pivot, 1760. Okay, so there was a little 3 drive. There was also a little 3 drive in Aussie too. 1, 2, 3. So we'll see. Any questions, guys? One thing I was looking at, even though we're getting a bounce in Euro Pound today, to me, it looks like there's potential for another shot down for a 3. Or we're going to form some type of head and shoulders, and the right shoulder could pull all the way back down to about 85.30. Otherwise, we're going to have one more shot down for a 3 in Euro Pound. So the Euro also has a chance for a turnaround Tuesday. I'll go with it. Low 50s. When you look at or mid, you know, this was $10, right? So if we have $10 from here, it's going to take you to about 54. But sometimes on a C, you get more than a quality. You could get some fib extension. And if you recall the interview with Shy Girl, Tracy, when we were doing this, we had sold off from the initial high. She liked the low 50s for a buy. Anything happening? Yeah, I think that we're getting a failing rally in crude. So S&P's made new highs late last week. All we could do was remember I was talking about the 62 stops being taken out, which happened here. and still contended we were not going to make a new high, but this would end up being some type of failing rally looking for a lower high. Does that help, Forex Gal? You're making me repeat myself. Okay. So, the yield question is, a lot of people looking for a pause in yields, right, Sansi? And, it's possible. I lean that way too. But, it also looks like we could have maybe, there you go, one more shot up, but it looks to me like it's going to be rolling over. So, everyone's worried about higher interest rates. What if we're going to pull back because there's going to be some risk off? What do you think? That yields were down yesterday. I don't know what you mean the bounce in the 10-year. Wasn't much of a bounce to put pressure on the market. So it was still, this kind of update wasn't much of a bounce. No, I think rates right now are not the factor. So that's my take on it. That I think the market can correct without higher rates, without the yields going to 2%, and that maybe we have a big correction in the market with the yields pulling back to 120 in the 10-year. Okay, so both lower yields and a lower dollar did not help the market yesterday, and didn't do much good for the metals either. So those are things I noticed. And then yesterday I was talking about the Canadian, and we had a decent bounce. It's really whipping around, but I can't remember the last day we saw like the Dixie was down 49 and Canada and crude was up, and Canada was still up about 25 or 30 on the day. So you have to ask yourself, if Canada can perform with a weak dollar and higher energy prices, that's a headwind. They're both headwinds. What if the headwinds turn into tailwinds and eventually we get some type of bounce in the dollar, like possibly today? So we'll see. Have a great guest for you today. James Anderson's going to be with us. Okay. 10 bip bounce. Okay. So turn around Tuesday, probably take a shot at some of those candidates that I talked about 1 year ago. Okay, 40. The most aggressive target in crude that I know of, John, is my buddy Peter Goodburn. He's looking for 35. Okay, that's TJ. Hi, TJ. All right, so the intelligence gathering we do here with interviews is also my intelligence gathering too. So, I have selfish motives when I talk to real good traders. So let me talk to another great trader right now. Hiya, Blake. You're pretty good. How are you, buddy?
Hey, sorry, I was trying to find the unmute button. So,
yeah.
It's like you catch me off guard. So, what's happening?
Tuesday, 2-day pullback in indexes. So we're going to see if they could hold in here. I don't know what your charts are saying, but we're getting to some important short-term levels here in
well, I guess first of all, we can take a look at equities and see what we're seeing, and I would say that we have reached some important resistance, and then now we're starting to take out some important support. But okay. I want to mention that it is, and this is the one thing we always have to pay attention to. We just stepped into the North American session, and you know what they do here in North America?
They buy the dip.
They buy everything. Yeah, they buy everything. Yeah. So now and I'm going to come to this euro yen here in just a second. I want to talk about that particular pair. So and these yen pairs. So let's look at equities really quick, and let me show you what I'm seeing. So we're at the top of this megaphone pattern as we've been just kind of climbing up here for the last few weeks. I mean, it's just been nonstop, right? So we're at the 161% extension of the this is the COVID lockdown move last year. That's the 161% extension, right? So if you clean up the chart a little bit, you can kind of see it. Let me get rid of this really fast. I'm going to get rid of this channel. We don't need to pay attention to that right at this moment.
What was it? 4137.
I'm sorry, I could barely hear you, Dale. What'd you say?
Oh, was it 4137? The 1.618.
Yeah, and it depends what, if you're looking at futures or, indices or the CFDs, it's around the 4150 level, just roughly.
Okay.
And that's, just kind of, roundabout numbers. This is the trading view, S&P 500, which is really close to the, to the cash market, right? That's why it's not moving right now. But what you'll see is we're actually below this channel support this morning. So if you use that as a channel, right? We're actually below that. If you look at let's go over to this is like the futures. This is a CFD from Oanda, but it is, this is the cash market, right? So what you're going to see is we're going to be breaking down through that support, and we're up against resistance. Now that's important to me that we've done that. Does that mean that we're reversing yet? No. But does that mean that we're, it's completely over and, the market's going to roll over? And no, but I think this is a risk now. But I'm seeing other things too. It's not just this pair, this index. You take a look at like the Aussie. I tweeted about it this morning. I got short this morning. If you don't know why, then you didn't read the blog that I did. I think it was last Thursday. Friday. It was probably Thursday because I don't blog on Friday. So if you look at the chart of the day from April 15th, that must have been Thursday. So I was looking for the head and shoulder pattern, right? And looking for it to hit the 618. We did it last night and we reversed pretty hard. So now the question is this reversal going to hold, right? Now I'm going to take you over to one more pair that I think is important, and that's going to be the euro yen, because let's go over to the weekly chart. So if you look at the euro yen, this is I guess 2008 13-year triangle consolidation, Dale. 13 years.
Wow.
That's been forming since my youngest son was born. Before he was born.
Symmetrical triangle.
It's a symmetrical triangle. Now that doesn't mean it can't break out. That doesn't mean that we can't go higher here. And we've been trying to the last couple of days or the last couple of weeks, but notice what we've been doing for, this is two weeks right now. Yeah. And before that, I mean, this has been since mid-March. So for a month, we've been in this tight trading range, really tight trading range for the last 2 weeks. And check this out. We break out to the upside overnight.
Stop hunt.
Go for a stop hunt. Amanda in the chat room, she just pointed this out. The 127% extension, I don't know if that's the one she was looking at. But that's way too tight. No, she was looking at this. There we go. The range, 127% extension. So imagine we've been in since literally for the last 3 weeks, we've been in this tight trading range. We break out overnight, hit the 127% extension, reverse, and now we're back below the breakout point in what I consider a ascending wedge that's been building for the last, year and a half. So I guess the question is that you're probably asking me right now is, what do I do with all this information? Well, the fact of the matter is if we close below, like, let's say 130.50, that's a false breakout, and you have to be looking to be on the short side. And think about 3 weeks of a consolidation, breaking above the highs, and then stopping everybody out.
Yeah, who's short now?
No, nobody. Well,
Right.
I mean, Stelios is, right, Stel?
Me? Yeah, I am. Yes.
Yeah, but and the smart people are, but not the people that are intraday or who've been, think about like the psychology of the last 3 weeks. You're sitting in this tight trading range and you're just like, I want to be short this damn thing. And so you're shorting and shorting and shorting it. And every time you hit that resistance, you realize, and this is, let's get rid of this really quick. So every time you knock your head up against the resistance the last 2 weeks, you're like, you know what? This is really key resistance. If it just breaks above 130.75, I have to get out. It's going to squeeze. So, you may have had longer, wider stops, a week or two ago, but, as we've hit this resistance so many times, you're just like, okay, I know if it breaks above here, I'm going to get stopped out and just be done with it. So then finally it breaks out, whacks all the stops, gets everybody out, and then now we're reversing. And that has got to be really irritating because, as you pointed out, Dale, it's just it's just just stopped everybody out. And I love those trades. As a predatory type of trader, I love these types of trades because, like, yeah, it stopped everybody out. Who's short? Now I want to get short because it got out all the shorts that were out previously, opened up the positioning, and now we can look for a reversal. So these are the types of things that that are they're developing right now. When you see stocks at all-time highs, when you see Bitcoin starting to break down, there's things that are starting to show their
Cracks.
Yeah, there are cracks in the surface, and we need to be really well aware of all these developments. So that's something that I'm paying very close attention to today. We had the Aussie dollar that knocked itself up against really key resistance. The dollar index, if you guys aren't following the dollar index, we just hit the 618 retracement. It doesn't mean that it's it's not ready to it's not going to go any further lower, but because we're at the 618, you obviously have to be really careful with being short the dollar at these levels. It's got, and Trade Journal just said the Euro Aussie is brewing as well, and I'll talk about that really quick because I got an email yesterday from one of the guys that I traded with for many years out of New York. And he's like, hey, Blake, what do you think about the Euro Aussie? He was asking about this yesterday. And, he's like, and I told him, I'm like, look, we're holding the 618 retracement. And he goes, yeah, fundamentally, this trade makes the most sense to me. And that was his commentary to me yesterday. And, this is one of those consolidations again. You think about it, we've been sitting here for the last several weeks, and he's thinking on the long side, I don't know if this is exactly where you want to be making your stand, but I do feel that if we break above this resistance at 157, it's going to be explosive. And if you're thinking about everything that is happening right now, where we're at currently with all of these different assets, whether it's the stock market, whether it's Bitcoin, and you guys got to watch precious metals here. I mean, they looked kind of bullish last week or two, and they're not looking as bullish anymore. So, just there's a lot of things happening. So anyway, with that being said, I'd like to bring in Stelios and Steve. And what's up, guys?
Good morning.
Good morning.
All good here.
What's I don't know if Steve is here. I haven't seen him.
He's here. He's here.
Guten Morgen.
Oh, he is. Okay. Oh, there he is.
Oh.
Hey, what's going on, guys? What are you looking at today? It's Tuesday, and as Dale would say,
Turn around.
it's Turnaround Tuesday, maybe.
So we're headed higher again today.
What's that?
So we're headed higher again today after
Yeah,
yesterday's
just
close.
another day in the stock market as we head higher. So what are you guys looking at? Anything that's brewing? We've, as Dale has pointed out, we've had 2 days of, well, this is our second day of potentially correcting in equities. You have the S&P that is down a little bit. We are below, some minor support, but we're still, we're what? Yeah.
Devastating downturn.
Yeah, we're a percent off of the highs right now. So that's it.
The Fed must step in immediately. This is inexcusable.
It's 2 days, although the second hasn't finished yet. I think for us to see really like something, a proper move lower, we need the dollar to start rallying. We need it. We need this last leg that we saw DXY going up to, what was it, 93 in a bit, or somewhere there. We need it to not be the high. It has to go back and challenge those highs again, and then I think we have a proper scenario for maybe a slightly prolonged risk-off move. But
I mentioned yesterday that the line in the sand for me in the dollar is roughly at 90.80. Today's low of the day was more or less there. It's a 61.8, and it's also an ascending trend line support. So, if the dollar bulls, want to make it, this is the last stand, in my opinion, from a technical perspective. Obviously, if we do get a risk turn lower, because so far what I'm seeing on the chart is just a pause, right? So another breather of a non-stop bull market. So if the dollar has a chance, is to actually see some type of an acceleration lower following yesterday's pause at key resistance. Now, if that doesn't happen, I think inevitably the dollar breaks down, and we continue on the same path that we've been on for weeks now.
Weeks, for months, forever.
No, I mean about the dollar now.
Oh, the dollar, yeah, okay.
Yeah.
And I have to say with the dollar, this is after coming out of this ascending wedge, we are at the 618. Probably one of those situations where you had people picking it up at the 50% retracement. As I was telling the traders in the ForexAnalytix chat room, and by the way, for those of you guys that are not in the chat room, just so you can kind of see what it looks like. I woke up I got in the chat room an hour ago. I got up a little late this morning. I'm in the green, so you can see, like, this is I got up right there, or got in front of the end of the chat room right here. That was just a little over an hour ago, and you can see all the chatting that's happened since then. And that's how active our community is, just so you guys know. So but when I was in the chat room, I'm like, hey, we held the 618 today. We do have to break back above this 91.50 level, in order for us to take the downside pressure off of the dollar. What was really interesting yesterday, and I have to point this out, is that even with stocks down yesterday, the dollar didn't believe it, or the FX market didn't really think that was doable. And in Asia last night, and I recognized this before I went to bed. I was up and about doing some things last night with my son, and I was shutting down my computer, and I saw all the people in the chat rooms were talking. The dollar index actually broke down, under pressure in Asia, and we had the euro, move up last night, but we've actually since then reversed. You look at the euro dollar, this is just a 4-hour chart, so I don't want you to read too far into it. The 618 in the euro comes in at 121. I was thinking we were going to come up to that resistance at some point, but now we're setting up an evening star formation on the 4-hour chart. This is setting up a little bit broader reversal that could take us back below 120 here this morning. So what that's telling me is participants in the currency market are now starting to believe that we're starting to see the dollar move up like it is, that the FX market's thinking that maybe there is a little bit of truth to this reversal near term that we're seeing in equities. But it's not just the S&P. We have other stock markets that are up this morning too, right, guys? I mean that have been, generally speaking, pretty strong.
Pretty strong or pretty weak today, mate? You mean?
Well, they've been pretty strong as of recently. Like you take markets like the German DAX. This market has been flying. Look at the weekly chart, but look at how it's reacting today. And today we're seeing a pretty big reversal, and we're approaching the lows from last week. So I think you got to watch the German DAX here. You start to see some of these European markets.
The DAX. If you zoom in closer, Blake, on the 4-hour chart, you'll see that the DAX displayed the very, very usual behavior coming out of a triangle, because we had that triangular consolidation. We got one more high, and now we're back in the vicinity of that triangle, which tells me that that was likely a terminal move. Of course, I'm not implying that, that's it, we found the all-time high and now we're headed lower towards, I don't know, like 8,000 or whatever. I'm just saying that probably, from a technical perspective, this reversal so quickly back into the triangle is pointing likely to a deeper reversal, which we haven't had in essence since, what was it, end of October, if I remember right. So it's in desperate need of, a corrective move. And I think we might be getting that now.
Yeah, and we may be getting it here in the DAX. The Nikkei, this is a chart that was our chart of the day yesterday. So again, Monday through Thursday, because I don't do it Friday, Monday through Thursday, I try to post a chart of the day. If you guys are not ForexAnalytix subscribers, this is a freebie for you. So just go to our blog. But you can see the Nikkei. One of the things that, when you're looking at like the euro yen that we looked at a little bit earlier, other yen pairs, you got to follow the Nikkei, because the Nikkei and the yen really are strongly correlated. So if you see a breakdown in the Nikkei, then that just tells you that the yen's probably about ready to strengthen too. But you are starting to see some weakness, and not just the U.S. equity markets at current levels. You're seeing it at in other markets as well, and that's the point I'm trying to make. So you guys can just see it's not just a U.S.
Blake, what was the index that, in my opinion, was leading a possible reversal? The Shanghai Composite. If you pull it up,
yeah.
Look at the move lower and a clearly corrective consolidation within a flag that we have now.
Yeah, and I'll have one last thing to mention about this before after you're done. But go ahead. Yeah.
Yeah, no, that was my comment.
Yeah, and I mean this is really you're exactly right. The Shanghai has not followed through to the upside, as a lot of these equity markets globally have rallied to new highs. And then obviously we need to point out, the Russell 2000. This is a head and shoulder pattern, and you can see the massively divergent relative strength. That doesn't mean that we couldn't break higher and relative strength would break higher. I've actually been waiting to see if that was going to happen, because as the Dow and as the S&P have rallied to new highs, and the NASDAQ was, back at the highs, I was thinking, oh, Russell should probably play catch up and we're going to, break back out over here. That never happened. And the risk is that people that have been expecting that, like, I don't trade the Russell necessarily, but I watch it, and my thoughts were, okay, well, it's going to play some catch up like the NASDAQ did with the rest of the market. It hasn't. So these longs that have been, establishing themselves, for the last several weeks are going to probably get a little frustrated here, and they might start pulling the plug on some of their longs. So you have to be careful. It's, we have, as Dale so eloquently put it, there are some cracks beneath the surface. So hey guys, I know Dale, is your interview?
Yeah, James Anderson is here.
James is here. Great. Okay, so let me just mention this, and then Stelio, Steve, and I will check out, and we'll see you guys in the Face webinar, or in the Morning Edge in about 45 minutes for the ForexAnalytix clients. But look, if you guys want to be a ForexAnalytix subscriber and you want to get it potentially for free, open a Pepperstone Securities account if you're outside of the United States and Canada. They are one of the largest Forex brokers in the world, and they're our partner. If you open your account right here, you can get up to 4 months free with ForexAnalytix. There's the head of research there, Chris Weston, and myself chit-chatting. If you are in the United States and Canada and you're not getting cashback rebates, make sure you visit Forest Park FX. Actually, I just visited with one of their senior partners this week, and he was out in my neck of the woods for a wedding. Flew in from Florida, and I got to hang out and have a beer with him, which was nice. I hadn't seen him since I visited them about 4 years ago. So it's been a long time. So, but anyway, great guys. And, Steve's a client of Forest Park. He gets cashback rebates. You should too. All right, guys, I'm going to let you go. Steve, Stelios, thank you very much. Dale, have a great interview. And
thanks, Blake.
Thank you guys for all checking in. All right.
James, welcome back to Face.
Hey, Dale, can you hear me?
Got you, buddy.
Good.
It's been a long time, way too long.
Yeah, it has been a lot has happened. How long has it been? It's been feels like a year at least.
Yeah, I think it is. And gosh, we probably haven't spoken throughout the pandemic, and
Sure.
gold made new all-time highs and it's come off. And I know that you're a sound money guy, and interested in where you think things are at economically. I know you're not just you look at everything, even though your wheelhouse is sound money, precious metals. What do you think is happening here? We have a new president. There's a lot of saber rattling going on geopolitically right now, James.
Yep.
What worries you about the landscape we see here, the financial landscape?
Well, I mean, if we look back to the lows that came about in the commodity market, especially during the COVID crash last March, I mean, if you look at the inflation, the price inflation in various things, I mean, obviously it's gone up, and the Federal Reserve's they're telling you it's just simply transitory. And I suppose I worry that it may not be transitory. I mean, we look back at the monetary base, M0, which really started to blow out when the repo market in New York Fed intervened in September 2019. I looked back at the data from there onwards to today. Last time they reported the M0, it's up 70%. So you're talking 18 months, a year and a half. We've blown our monetary base up by 70%. And I know there's all these people who say, well, it's just stuck with the banks. It's not getting out there. There's not a lot of turnover. There's not a lot, there's not a lot of velocity with the currency, et cetera, et cetera. But one day that may turn, and one day there will be velocity with the currency. And then where the hell are we then? I mean, it's to blow out your monetary base that large and not think that there's going to be repercussions for it. I think you're deluding yourself. And so it's in the short term, things can look and appear nominally as if everything's okay. But I think longer term, my spidey senses are up, and I'm guessing my thesis is still going to play out. They have to kill the dollar in order to nominally meet all the debt and promises we've not saved for. And that's the easiest way out historically for fading empires to go. And that's, I think, what we are.
Okay, so what do you think technically? I put up the gold chart. Can you see it?
Yeah.
Okay.
Yeah, I was
Go
looking
ahead.
at it. I was thinking this week. I mean, if gold wants to show that it's on a rebound and it's ready to start going, it's got to clear 1,800, right? I mean, can it do it intra week? And I mean, can it close the week above 1,800? Can we do that? You know, I on a short term trade, I don't know. You know, that's like a coin toss to me whether or not it can do either one or the other. You know, when I talk about gold or silver, I talk with a time span of
10 years.
Like two years at least for good performance, and 5 years for the thesis to really get rocketing and exponential, and 10 years for it to fully play out, and for everybody on the damn street to understand that he was right.
Okay, so can I assume that you're in the super cycle bull market that's going to take silver, to 3 figures?
I think so. I mean, 3 figures for silver is, I think, a gimme. I think you got to get beyond 50, obviously, because that's the ancient nominal high. That's, you name me something else in the commodity markets that's less than its record price in 1980. I mean, it's been a long time, right? It's been 41 years since it hit 50. I mean, it came close in 2011, but the all-time high was 1980. And yeah, Dale, I think we are walking into a commodity super cycle that'll probably peak out in the early 2030s, late 2020s.
Whoever thought that lumber prices would top gold prices?
The fact that lumber is, it's literally
1900.
Literally growing on trees, and you have to go blast mountains and sift through rocks and tonnage to get silver. And the fact that the prices are pretty close, pretty interesting. Look, it's one is money and one's not, and I think we're going into a situation where we're going to be questioning our money.
What do you think about gold silver ratio here, James? We've come in quite a bit, and I'm going to put it up here because it's been playing in this 68 level, and I'm a little torn. When I look at this now, I thought we might get a breakout here and that it might correct. But, this washout low down here had a confirmed low, and thinking that maybe there might be a continuation of silver outperforming gold. Which side of the fence are you on with this?
So I do a video every week for SD Bullion. There's a YouTube channel that we do. And last week I had someone tweet me a really nice chart. It was a clean chart, about 11, 12 years of gold silver ratio. What it showed was, I think, the 50-week moving average and the 200-week moving average, and it showed a death cross essentially. Last time you saw a death cross like that was back in the run from 2008 to 2011, and we just had that death cross on this chart. And I tweeted it out. I put it in the last video on the YouTube channel, but it was a really clean chart. And what it showed is we're just crossing that. We're doing that death cross again, like we did in that last little bull run, and whether or not it can spike up and go to 70 in the short term, obviously I don't know that, but I think ultimately, it heads back toward the 2011 low ultimately in the next
40.
Few years. No, 2011 low was 33. I think we hit 33 and we blow beyond that in the 20s, and it could get really stupid. I mean, look, if silver goes to $100, $200, $300, I mean, people who are into silver are absolutely manic about it anyway. And if you get a really performing well and they're able to brag about it, I mean, that's just going to get everybody piling into it, and it can get really stupid on the upside. So for as depressed and as terrible of an investment as it's been for, 4 or 5 decades, and I assume that it's been systematically suppressed for many reasons, I think it can get as stupid to the upside for a short stint.
You've been around long enough, James, to remember when platinum used to trade at a premium to gold, quite a premium.
Twice, 2 times, 2 times. I think in the early 2008, it was out of control how expensive it got.
Yeah. Do you think there could be kind of a reversion to the mean where platinum could play catch up?
I totally do. I think what we're dealing with right now is what we're headed toward is a monetary crisis, and that's why gold has been so firm and strong for so long versus platinum is seen as more of a commodity, et cetera. But if you look back at like 1980, what was the last time we really had a peak scare in, the fiat currency, you saw all 4 major precious metals spike exponentially within 4 months of one another. And I assume that'll be the same case here. So
How old were you then?
I was, let's see, that was early.
It was
So I was like,
1979.
yeah. So I was
Yeah.
2 months old in the gold silver spike on January 21st, 1980.
Really? And was your pacifier gold?
Exactly.
Anyway.
I had a silver spoon in my hand.
Oh, there you go. Silver spoon. All right. So we
Yeah.
got a lot of puns out of that one.
Sure.
Yeah, I remember that. And do you remember the high? Spike
Yeah,
high?
the high was 850 in gold January 21st, and silver was right near 50, and they were simultaneous. They came in and they said no more longs in silver because we're going to scapegoat the Hunt brothers.
Yeah.
I think everybody ran from those pits over to the platinum and palladium and built a exponential bull that happened a few months later.
What a memory you have for a 2-month-old. You remember all that. So basically we're going to have a dollar crisis. I just have to say this, James. I've been hearing about this since the 70s.
Of course. So it's different though, Dale. I mean, the speed at which things are changing now with central bank digital currencies, the IMF SDR, the MSDR system that's supposed to supplant the treasury market. It's eventually, I mean, we're moving more toward a multipolar world where the US dollar cannot be as dominant as it's been. We're not the largest economy anymore. It's just not the way it is. China's moving pretty fast. And I don't know,
China's going to go to a digital yuan
right,
to try and upset hegemony of the dollar. How will that? How will that? What do you think of that?
Yeah. So what they could do, and Kyle Bass was recently on CNBC talking about, I mean, and it's true, they can go to their direct fiat yuan CBDC, and that basically bypasses any of their bank system. They can just do it directly with the People's Bank of China. And then the People's Bank of China can turn to any of their major trading partners and say, here's what you're going to use. And, like it or not, these are the terms. And so there'll be no more US dollar issuance in between. There'll be no demand for the products. You're just going to use this CBDC in the yuan. And if you think about commodities in general, I mean, so many of them are like 50% are bought by China, right? I mean, so then all of a sudden it's like, okay, well, so where's price discovery eventually going? Because, China's not going to put up with that in like 10, 20 years. I mean, the idea that the U.S. is going to dictate to them what the price of commodities is, I don't think that's going to work if they're going to continue buying at this clip. So this is probably step one in the process of kind of extricating the U.S. dollar, at least out of their trading. And then eventually at some point, they're going to have huge markets. I mean, silver, I assume silver's price discovery's headed east by the 2030s. You have, Singapore, a major trading hub. You have a lot
wasn't that supposed to emancipate the price of gold and silver from the paper market? Because
there was always people who
Jim Sinclair.
They jumped the gun and they think it's happening tomorrow. This takes decades. I mean, it's a long run. But the one thing that is interesting is that you're using technology for the fiat yuan CBDC to make your trading partners use that and not use a US dollar or a euro. That's a big step. And if you start using an MSDR, that means that the United States dollar is no longer, the people are buying, treasuries, et cetera, but maybe they're going to buy an MSDR. And that means, US dollar is only like 40% of that, 35% of those types of debt instruments. And so you're basically pushing the dollar to the side. It's no longer 60, 70% of all transactions. It starts moving toward 40% of transactions, 30% of transactions. And that's a big difference, right? So
you think
go
ahead. I'm just wondering if you see anything, we have a new administration. President Biden didn't go as far as he could have with the Prince, Ben Salman, of the murder of the journalist. He just, there were no sanctions or anything, but I always read that a real important part of it being a reserve currency is oil being priced in dollars. So, people have been talking about, the death of oil. We don't need oil. We're going to have EVs. I think oil is going to be around for a while. In fact, the green energy people probably would love to see $120 oil again, because then it makes green energy and electric vehicles even more compelling. Do you think there's any risk now of the U.S. losing its petrocurrency status with Saudi Arabia?
So that came about in the 70s, right, when Kissinger went over there and made these deals, and it was basically, we'll give you guys protection in this bad neighborhood that you live in, so long as you agree to essentially funnel your profits through our debt instruments, and that really got it going. And you're also pricing your oil in our currency. I mean, that's a big argument why we invaded Iraq, because they were gonna use the euro instead. So yeah, I mean, the idea is like, first of all, go look at who buys the most oil in the world, right? It's probably China, I'm sure.
Yeah.
I haven't looked at the data recently, but you know, they are the largest economy, and they've been, if you've been paying attention, they've been kicking our ass for the last year or so in terms of how they're performing versus our economy. I would assume that they're in the next 5, 10 years, 20 years are going to be the largest economy. And it's even possible that the SDRs, that's eventually, I think, where we head in terms of the supranational currency and the trade. I think the headquarters is going to be in Beijing. Christine Lagarde's already on record, 2017, saying that. Before she was the European Central Bank head of central bank in Europe, she was in charge of the IMF. In 2017, she publicly said, "I dream about having the headquarters of the IMF, SDR, you know, at the IMF in Beijing, China by 2027." I mean, yeah, it's they plan on this for a long time, and they work on this for a long time. It's coming. I may sound like a raging lunatic. You may think, who's this jackass on this trading show? But these are the people in charge, and they say it publicly, and people just don't pay attention.
What's the M in front of SDR? We've heard SDR for years, but
I think it's market SDR. I believe that's what they're talking about. It's a private public. You can also what they want to create is a debt instrument that private institutions can buy into, right? So you can crowd out the U.S. Treasury market and start to bring in the MSDR, make it more of a multipolar, kumbaya debt instrument.
And when people talk about the Great Reset, this is what they're talking about, right?
I think people, when they talk about Great Reset, usually in marketing terms, is like shock and awe, overnight revaluation nonsense. You know, I think this is more of like how the real world works in terms of
like a train wreck,
long-term planning. You know, eventually when it's time to actually implement this, you're going to need some chaos. So they may come up with some fake chaos, and you know, let's be honest. I mean, I'm sure a lot of these commercial banks, if they were truly mark to market, are probably bankrupt. You could simply just bankrupt one of them, have a chain reaction, and say, "Oh, we're going to have a meeting and come out with a new system." You know, I mean, there's nothing that difficult about it. And a lot of times, what you're being told on the news is not the truth. You have to look underneath to kind of figure out really what the truth is, and you have to do deeper digging.
I'm glad I have you on because, I've been receiving a lot of these emails, people that have been talking about blood on the streets forever, and they're right once in a while. And they're talking about some law that Nancy Pelosi just got through the House, and it has, they say, if you have more than $5,000 in your bank, that this is going to be important to you, and you could lose your savings and pension. Do you know what they're talking about? What kind of hype they're scaring people with?
It's so a lot of times people who use there's a law called it's bank bail-in law essentially.
And bail-ins.
The G20 signed onto that in 2014, and the G20 obviously the top 20 economies in the world. And it's this law that they all will hold hands if some massive commercial bank goes under, and they won't bail it out, they'll bail it in. And that means that
your savings, well, actually, don't people know, probably most don't, that once you deposit your funds in a bank, it's their money.
Yeah, I don't think people understand that it's really an unsecured loan, and all you are is an unsecured creditor. And that means that you really are like the last line of getting any money back if there's any bankruptcies. The only the hope that people should hold on to, though, is if they have FDIC insurance and it's not huge systematically, like all the banks start failing. If you're just one bank and you have under $250,000 in an account there, you should be backed up by the FDIC. It may take a long time to get your funds, but at the very least you'll get something. Look, the bottom line is you better know who you're banking with. I wouldn't bank with any banks that trade in derivatives. I'd find a respectable credit institution in your local area that you trust, that is not a gambling casino in the back of the.
Good point.
That's the key.
So a lot of the credit unions are like that.
Yeah, the credit unions are safer. I mean, you got to do due diligence and look at the books of these companies and actually be shrewd about, your choices and do due diligence, because there are bad banks that do real estate loans in terrible markets, and the real estate's going to fail. So they may fail, right? But then if you look at the banking industry in general in the United States, over 50% is owned by the commercial, 50% of the market share is by the casino derivative trading banks, like the JP Morgans, the Wells Fargos, the US Bank. Any of them that trade in derivatives, I would be I would keep an arm's length in my business and in my my personal savings, et cetera. Because I think eventually they may have trouble in the derivatives market, and then who knows what's going on behind the scenes.
James, have you ever seen an environment, and it's going to include maybe a little comment about crypto, like I would ask you, would you rather have an ounce of silver or a dog coin?
Yeah.
Doggy coin. And I was around in 2000. I know what a bubble is like,
Right.
but even that was concentrated with anything that had .com after it. But now you have commodity prices, you have real estate prices, you have equity prices, you have crypto prices.
Right.
There's there is
Well,
hardly anything that's not a bubble at this time.
You blow out the monetary base like we've done in the last 18 months or in the last few decades. You just go back and look at how ridiculous we've done, with these QEs, et cetera. Now it's infinite QE and stimulus forever. That's what happens. I mean, I would argue they've done a really good job of suppressing the most important bellwethers, like the canary in the coal mines. The gold price has been depressed, and the silver price has stayed pretty depressed. But ultimately, that'll revert, and those two will go ape shit, because when they're ready with their CBDC systems, which I think is what they're planning on, they want to have a fiat Federal Reserve note CBDC US dollar that they're going to hand out to people and give them MMT or a monthly stipend or something like that to kind of get through the malaise of the economy, and kind of to build equity and not have people riot in the streets because they can't afford the food prices. They need to have handouts, right? So that's what they're getting ready for. And it's just a question of when is that system in place? And then they can kind of really go pedal to the metal to devalue the fiat Fed note and the promises they never intended to keep in the first place. I mean, I'm cynical in that sense, but that's exactly what's going, I think. And it's just, in the short term, obviously you guys are mostly trading on the short term, but I'm trying to give you a longer term perspective.
Right. So let me ask you this about long term. I claimed that when Modi went ahead and pulled a large denominated rupee in India, that it was kind of a dress rehearsal for a so-called democracy to do that. What do you advise people that are sitting on a stash of $100 bills right now?
So first of all, it's not a bad idea to have a good amount of cash kind of squirreled away in the house in case there's ever a freeze of the financial system for a few months.
Yeah, the ATMs vis-a-vis Jim Rickards are empty.
Yeah. So having having 3 to 6 months of household expense cash, squirreled away somewhere in the house in $20 bills, I think would be the suggestion, not hundreds. And
you
to
think
do
they'll
that,
recall the notes?
No, I don't think they'll recall them. I hope not. I mean, that's the Ken Rogoff argument that only drug dealers use $100 bill, whatever. I mean, I don't think they'll be able to do that. Maybe down the line they may try that, but and I'm just saying.
Well, they could use COVID for an excuse.
That's true.
They're using it now, right? I mean,
it's true.
So that's what I mean. COVID's the excuse for everything, isn't it?
And also, Dale, you look at like Visa and MasterCard. Obviously, they're in on the game. They love it, and they incentivize small businesses to use their little quick payment options. Some of these businesses don't even accept cash. So yes, that's where the system wants to go, is less cash. So you are right. I just think 20s in a financial crisis is easier to break, and that's just
right.
You don't want to walk into a grocery store with a C note. I do that sometimes here in Panama, and they look at me like, "Nah, you got 20." They want a smaller note. So and that's just, and if you have a lot of cash sitting in short-term, U.S. IOUs is not a bad idea. They're not going to default on those.
T-bills, 90-day bills. Yeah,
exactly. Like that's fine. You can sit in those. Those are safe. The U.S. government's not gonna default on that kind of thing. It's a lot safer, I would expect, to be that than in one of these derivative casinos that could eventually have real trouble. So I think it's just knowing your counterparties and who are the most risky ones and who are the ones that are questionable, and staying away from the questionable ones.
Okay, so by the time we go to an SDR, and what do you figure, just a good guess, like maybe 5 years away?
Yeah, I think by 2025 this will be pretty damn obvious to everybody, and it'll become by that time, I would imagine we'll have gone through another major crisis financially, I would think, and that's where the SDR kind of comes out and springs aboard. And
where's gold at that time?
Well, gold, if you look at, the monetary base and just history in general and how it performs, I expect that it'll at least clear 40% of the monetary base. In order to do that, that's a price of over $8,000 gold at today's, U.S. fiat Fed note. So ultimately, that's like a four bagger in today's value, essentially. And silver, I expect. I mean, you got to play off the gold silver ratio from there because gold is the leader, gold's the mother of this thing. I assume it goes below 30, so let's just say it's 30, and you have $8,000 gold. Obviously, it's a couple $100 silver at least. So, yeah, that's my expectation.
All right. Well, you're stacking it there in Panama in the mountains, James. It was.
No, I keep it in other places, not here.
Okay, so would you consider gold like the $100 bill and silver the 20? So yeah. I mean, if it comes down to that, what kind of how are you going to barter with 200, like every 1 ounce coin of silver?
I don't expect we're going to get in a situation like that, Dale. I don't think we're ever going to get in a situation where you're going to be running to your local Chevron and trying to pay with a silver eagle. I think what you're going to get is the situation where it's high inflation. Right. Maybe there'll be a crisis where they freeze things, but I don't think you're going to be running around bartering with silver. I think you're going to be using fiat Fed notes. Hopefully you have them in cash and you're not sitting in lines at the ATM bitching. Right. So that's it. Just kind of be prepared for the worst. And if it doesn't have, then spend the cash slowly. It's not that big a deal. You just basically plan ahead for the worst case scenarios and nothing crazy. I'm not talking about, Armageddon or Mad Max scenario. I don't foresee that. I don't think that's happening unless an asteroid hits the earth. Then all bets are off.
What good is anything going to do for you there? Anyway, hey, James, newsflash. None of us are getting out of this alive.
Yeah, you got it.
Anyway, so enjoy your life, and you're a maverick. You left the U.S. and in the mountains of Panama. Yep. I think about it every time I see you on Twitter, James, and I think about your knowledge base, and I think that people should consider getting a hold of you, and that you could be a great source of do you help people if they call you and they say, they want to buy from SD Bullion? I'm showing your Twitter handle here.
So the best way to get to know me is probably watch me on Twitter. Follow me there at James Henry And if you're in the United States, that's who we service. If you're in the United States and you're interested in buying bullion, SD Bullion is the company that I work with. You could find as well the videos I do on YouTube. I do them every week. So I think you'll find if you have interest in precious metals or precious metal related news and information, I think you'll find those interesting. If you thought any of the insights I had during this interview were insightful, or if you think I'm just a blowhard, at least you could go check it out further and think and see the credible links and sources that I use. It's not just me speaking here. I'm actually speaking from what my research has shown. So.
And who's this? Your bodyguard?
Oh, that's that is. We didn't get into it today, but that's the silver squeeze. That's a new phenomenon that came about from the GameStop. Meme? Yeah, well, it came out of the GameStop thing, and you have 60,000 kids on Reddit. Not kids, but there's adults there too. And they're all totally in on silver, and they think that silver is a great bet for the decade. And so expect to see more news and information from that.
They did learn a lesson though, didn't they? That there's a difference between squeezing stock and a global commodity market.
Well, the global commodity market, silver is a lot larger than a stock. That's true. And silver did pop to 30 for a minute, but then the CFTC came in and tapped it down, as Rostin Bernstein said, just in, I think, March 18th, 2021 in an interview. He literally said, we have tools for that, and we can keep the, things in line, et cetera, et cetera. So, hey,
JP Morgan.
Ultimately, the kids know to take the bullion and to buy the PSLV. If you're going to get a closed-end fund, get one that actually backs it. So they know the fundamentals. And look, Dale, this is a war. This is not just a battle. This is a long-term game.
Yeah. Well, you got to win a few battles to win the war, and
true.
And thanks for coming in here and showing us your battle plan, James. And
I appreciate that.
I'm not surprised by it, but I wanted to get an update and see what you were thinking about what's going on in our world, and appreciate your insights. And you're a great hard money guy, and I appreciate you giving us some time today.
Oh, great, Dale. Let's do it in a half year, not a year next time.
Okay, I promise. All right, everyone. There's James Henry Anderson. There's his Twitter, and you can get a hold of him there. And I think everyone should have some physical close by. And that's a wrap for Turnaround Tuesday, everybody. Have a great trading day ahead. Looks like dollar is trying to bounce back here. And don't forget to join the team in 15 minutes for Morning Edge. Thanks again, James. Good hunting, buddy. All right, brother. That's a wrap, everyone. Remember, don't just count your coins, count your blessings. Adios.